talking about Stockal, and I understand that the opportunity has been circulated, and the initial context has been set. While that's the case, I'll kind of talk a little bit about the background, how we got started, and then quickly jump into what we are doing exactly at this point of time, and then why this discussion sort of makes sense at this point of time again. So like Datta was saying, the background of the company per se is that we started off as an investing dashboard for US retail investors in 2016. But over the next 3 years, we sort of realized that just being an investing dashboard wasn't probably going to be value creative enough. And as we were doing that, we got a lot of very good experiences in terms of working with brokerage firms in the US. So we got a very good hang of the US capital markets ecosystem, and we got a very good strong relationships with most large US based brokerage firms, all the way from Charles Schwab to TD Ameritrade to Fidelity and Drive Wealth, their interactive brokers, and so on. Morgan Stanley, Trade, everyone. Uh, Pretty much created an ecosystem where we could bring multiple brokers together on a single platform. That's what was really helpful. But by 2018, we started seeing a lot of demand for global investing from India. A lot of friends and people in the Indian wealth management space and in the Indian brokerage space would ask us, that can I help a client, direct a client to the Stockal platform? Can they invest in the US using Stockal? Sometimes they would, investors would also come. Can I use your platform to invest in the US? In all those cases, we had to sort of, tell them that we can't onboard people from India. So the opportunity is really for people who are already in the US or have a brokerage account with one of the brokers which are empaneled on the Stockal platform. But over time, this chatter kind of increased the demand. We saw that the demand was growing. And over time, we kind of realized that this is probably a more meaningful problem to solve, given the fact that Indians are exposed to global companies, global products, global experiences, by way of content, by way of education, by way of travel and immigration, and so many other things. Our global experiences are probably at the highest that they have ever been. Uh, and therefore we are also exposed to global expenses. A lot of us are spending money internationally. In fact, RBI's LRS data, the liberalized remittance scheme data that RBI publishes every year, kind of suggests that remittances under LRS, which is money sent by individuals from India, uh, that remittance amount has gone up from about about $1.5 billion in 2013 to about 19-20 billion dollars now. So it's not been that long, to be honest. And last 2 years we had COVID also. Within the overall umbrella of LRS, the amount of money that is going out for education, for instance, has gone from $140 million in 2014 to nearly $4-5 billion now. So a lot of people who live in India are actually, saving their money in India, keeping their money in savings accounts and fixed deposits, and in some cases mutual funds, and then spending these monies in dollars. And when you're spending money on things like fees or rent, you're essentially spending money at an arbitrary forex rate. It's not that well planned, right? So it's much better if one could save and invest in dollars, and then over time, have a sort of a kitty of money from which one could spend internationally or in dollars as well. So all of this sort of discovery, in a sense, helped us sort of feel that there is a very large untapped underlying opportunity that Indians, are missing out on, and that businesses are not really focused on. And what really is missing, or what we found missing in those days, was uh, that there was no logistics for doing this. The infrastructure to invest internationally really was absent, and it required work on the US side as well as the India side. It required work on, on the US side. You needed to have Brokerage, regulation followed. You needed to have compliance like AML compliance and stuff followed. You needed to make the regulator comfortable in the US. On the India side, you needed to make sure that the KYC of an Indian person or an Indian resident looking to open an account in the US or UK or any other global market, that KYC was kosher, and you needed to sort of make sure that RBI was comfortable with the compliance that banks were following for sending money out. And both these things were basically missing. This is 2018 I'm talking about, as recent as 2018. To imagine that we discovered that if you have to send money out for the purpose of investing, no bank would allow you to do this online in 2018. Right? So we kind of discovered a use case in finance where it still hadn't even been digitized. And obviously, because of that, nobody wants to visit a bank physically these days. After what we've seen in the last 10 years or so, we just knew that it would never happen. If things remained offline and physical, so to say. At the same time, we very strongly have believed, and every day, that belief sort of grows stronger, that in another 4 or 5 years, people who come to the markets then, like 25, 27-year-old folks who join the markets, let's say in 2026, 2027, they will not really think in terms of, am I investing in India or am I investing outside of India? They will look at companies, they will look at, securities, they will look at funds, they will look at products. I mean, they may not even be investing only in stock markets. Now the alternative asset world has grown so much. They will not be able to sort of digest the geographical constraint on capital, because they haven't experienced that in any other walk of life, be it, like I said, from content to education to relationships and expenses and so on and so forth. So they will naturally veer towards investing as and when, wherever there is an opportunity. But then they will see that, hey, there is no logistics to invest. Sending money out is difficult. Nobody wants to open my account. And then that will be a situation which I think is a kind of world which is unimaginable at this point of time. So somebody has to build the infrastructure. Somebody has to do the hard work of making sure compliance requirements are met, frameworks are created and delivered on. And somebody has to develop bridges between geographies so that money can move more easily, and investments or whatever the purpose of money is can be met more seamlessly. And we sort of feel that if we solve this problem properly, then we'll become a very attractive company, be it for markets, be it for somebody who may be looking to do something strategic with us. Because overall, India, emerging markets in general are a very attractive place for anybody who's in the developed market as such, bank, broker, fintech, wealth manager, what have you. Right. And we also realize that this problem is not just an Indian problem. The problem exists across emerging markets. So we are fundamentally speaking a transnational play, cross-border from emerging economies into, say, developed economies, right? And across products, across asset classes. That's how we are building it. We are already in India, obviously. We are now in MENA as well. Last year, we ventured into MENA. We just got our in-principle license under DIFC. We have a subsidiary in Dubai, in the Dubai International Financial Center. We just got our Cat 4 license in principle there. We are getting into Southeast Asia as well. And within MENA, again, it's not just about Dubai or UAE for that matter. We are present in, now we are actively present in multiple countries. We are in Oman, Bahrain. We are going to be in Qatar very soon. And we are also looking at Turkey, Saudi Arabia, and Egypt as markets. In Southeast Asia, we are looking at not Singapore per se, or not just Singapore. We're looking at Thailand. We're looking at Indonesia in a big way. We're looking at Malaysia, Vietnam, Cambodia also. And at a certain stage, we'll be able to look at China as well. There are massive capital controls in China, and there's a lot of resistance to onboard Chinese residents into the US or UK. But there is a play there. And while all of that is happening, we are certainly doubling down on India. So that's essentially the universe that we are playing in. And on the product side, we are looking at investing and savings-oriented products. So when it comes to investing, we started with the plain vanilla Robinhood kind of approach, that you can invest in US stocks, you can invest in US ETFs. And then later on, we launched a portfolio product called Stacks. So you can invest in stacks, which are basically created and managed by global wealth managers, asset managers, and portfolio managers. Now, last month we launched the funds platform. So we have onboarded three funds so far. You can invest in hedge funds via Stockal as well. And we'll onboard more funds. The three funds that we have, one of them is a quant fund, another one is a SPAC oriented fund, and a third fund is a life fund. We are launching a fund of funds, and we are also going to launch a sentiment based fund, and there will be some alternate asset class funds as well. So now many funds and product providers are actually coming to us, and we have an active pipeline of evaluating, diligencing fund products, which then we can probably bring to the Stockal platform. We're also launching a bank account product in this quarter. Actually, in the next quarter, so July, most likely end of July, we launch the bank account, which is basically a very straightforward US dollar bank account for somebody who's sitting in India using an Indian PAN card, an Indian passport, digital KYC, and zero account minimum. It's a very straightforward banking product, which will then help you also sweep money into fixed income portfolios. So essentially becomes a cash management kind of offering for people who want to save up for the long term. And then we'll do more products. So as we grow, we'll keep adding products. We are an open architecture platform. We'll keep adding newer products and asset classes to Stockal, and we will on the other side, keep adding new countries where we will keep getting regulated wherever it is required to be able to do KYC and follow and help with the AML compliance and capital controls and such. And that's how we are generally overall envisioning Stockal. I'll maybe just use a deck to refer to a few slides here and there, so that everybody has the context more visually while I'm talking. Just take a moment to share my screen. Right, hopefully everyone can see this. So fundamentally, we are about creating a borderless world for your capital. I'll skip these things. Some high level numbers as we are talking. Over the last 23-24 months, we've crossed a little over 1,000 crores in assets, largely coming from India, but about 10 to 15% now coming from the Middle East as well. And even in the downturn in the last, I would say 5-6 months, our assets have not really fallen, because while the market is down and people's existing investments are obviously down for the most part, new assets have continued to come in. And the new asset inclusion has been pretty strong. Jan, Feb, March quarter was very good. Even December was very good, and April, May has also been pretty solid. So continuously, newer people are coming in, newer accounts are opening, and new monies continue to come in. And when the market sort of starts recovering, the same 140 odd million will actually on its own grow towards 160, 170. And while that happens, hopefully new money will continue to flow in. So, before the end of the year, we should be looking at, say, about 400 to 500 million of our own Stockal's assets. Like I was saying, the basic pillars on which we have to build this borderless investing platform really are that we should be able to do multi-country KYC. We should be able to we are able to onboard multiple investing assets or asset classes. We are taking care of remittances, cross-border remittances, and compliance with respect to central banks and so on. And basically build an advisory kind of feature around it, so that automatic investing, etc., is straightforward. Reiterating the products, brokerage or investing is the first. Asset management is the stacks offering that we now have. Banking is what we are launching now. We are tying that together with fixed income. So banking and fixed income will actually go together. And then the funds platform, and then alternative asset classes, including crypto, will come to the platform. And all of it under a single umbrella, right? So you have a Stockal account, which basically will take care of your money being completely borderless. You have dollar holdings. You can invest the way you prefer, and you can save the way you need. And we'll give you a debit card, etc. So you can spend. You can do ACH, wire transfer, everything that is available to a typical bank account, including insurance and FDIC backing, etc. Everything is as standard as a US brokerage account is, a bank account is. So we are kind of combining investing and saving together to give you a two-in-one kind of experience. Uh, so this has been stated many times, now for about a year in the media, etc. as well. I think why this is a good time, is mainly because the numbers are really pointing in a direction which kind of shows that all numbers, all metrics pointing towards outward remittances across purposes have grown massively in the last 6 7 years. That is a clear indication that people are looking overseas for pretty much everything, and there is an underlying very secular demand for something like this. But there have not been any products, so therefore growth hasn't quite been seen in investing. But this year we should see that growth. Last year already, the uh, LRS for investment in 2021-22 actually went from 470 million to 747 million in a single year. So that's like a whatever 70% odd jump. This year when investing overseas is becoming a real thing. So this is really the trend when it comes to LRS. Of course, many brokers and wealth managers are now offering global investing or offshore investing as a product, as an asset class as well. We've processed, so this 725 million is a little bit old now. We've done about 750 plus million worth of transactions in the last couple of years, and there is no margin. There are no margin accounts because RBI does not allow margin. So this is all delivery trade. So it's fairly engaged, fairly involved, user base who's trading fairly actively. We believe it's a large enough market for us to get to a 10 billion plus kind of AUM in the next 3 to 5 years. And a 10 billion to 15 billion in AUM will yield at least 100 to 150 million in revenues as well. So the opportunity is out there. We have to be multi-market. We have to focus on various regions. India will always be deep, but I think we believe that Southeast Asia and MENA are very, very strong markets, considering population and considering the amount of money that's there in some of these places, and the fact that local markets are very shallow. So people have to invest overseas. Mass affluent population is very large as well. So we believe that it's a very good time to address them, because if we take any longer than, let's say, 2 or 3 more years, then there will be a lot of players in this space. So this is the time to basically come in and set up and start dominating over the next year, 2 years. We've also kind of noticed trends around the kind of demography and the kind of people that we are actually addressing as we speak. So if you notice the average AUM here, in the range of $10,000 odd, overall is a pretty high average AUM for a retail platform. When we look at typical Indian retail fintech platforms like brokers or even wealth platforms, average ticket size, average AUM is generally very small. It's in hundreds of dollars. It's not even in thousands of dollars for large Indian new age brokers and so on. So in that sense, this is a very interesting discovery that we've kind of had, that the average ticket size of an Indian also on Stockal is not like, it's not 50 or $100,000, which is a typical wealth ticket size, and it's not a few $100, which is a typical broker ticket size. In our case, it's $10,000, which is a very, very meaningful amount for a mass affluent kind of user. And this is the first year, 2 years worth of money. So this will actually grow from here, because we also see almost about 60-70% people adding money year on year on the platform. And then there are other trends. There is obviously a certain maturity when it comes to age. More and more people, especially in India, are above 40-45 years. In MENA, surprisingly, this number is a little bit, the age number is a little bit smaller. People who are 30 to 45 years are the dominant category, and Southeast Asia has its own characteristics as well. While doing this in the last couple of years, we've tried our best to sort of discover various revenue generating areas in this business. Like I said, we understood the capital markets in US fairly well before we actually ventured into creating a global investing kind of use case. And we also wanted to make sure that from an economic model perspective, we had absolute clarity, or a meaningful amount of clarity, to sort of know where the money would come from. And it's a business. It's not a free trading kind of platform. It's not a gaming platform where people trading on virtual money and so on. So we just sort of felt that we had to have very straightforward ways of making monies. And therefore, today we have three revenue areas. We have subscriptions. We have we don't have free trading per se. We continuously keep giving offers and plans where zero commission plans are available sometimes. But by and large, the platform charges people for trading. It could be a small amount. It could be it's never a very big amount, but it's always something. And then there is AUM based fee on the portfolio products or the stacks that we have. So we are making about 70 75 bips of AUM overall, kind of as overall revenue, including subscription, transaction fees, and AUM based fees for AUM based products. We've also discovered 2 3 areas of revenue which aren't active yet, but we are activating as we grow bigger. We will do margin accounts, but not in India. We'll do margin accounts in Indonesia, basically in the Southeast Asian region, and in MENA. Margin is very popular, as it is in India, but overseas margin from India is not allowed. So we'll do this outside of India. We'll be able to make money on forex. We've done pilots for this. We'll be able to make, say, about 30 bips, 0.25 to 0.335% on every forex remittance. And AUM begins with forex in our case in almost every scenario, because people have to remit money into a dollar account to be able to use Stockal. We are beginning to control fund flows on the forex side as well. We've actually sponsored a company to take RBI approvals, etc., for a pool and remit kind of feature also. So we've done a fair bit of work with the regulators also on that, and that is now coming to a point where it will yield actual direct forex revenue for us. We also have relationships with banks where, for example, with HDFC and stuff, HDFC is also an investor in the company. So we're putting together a system which will make forex remittance, foreign remittance for investing very, very straightforward. It will bring everything into the Stockal user experience, and therefore in our control. And it will help us, make some monies on that as well. Then on the payment, on the trading or the US brokerage side also, we have negotiated revenue areas where we'll not have to charge the customer, but we'll be able to make money in kind of in the ways that Robinhood makes money, which is essentially payment for order flow, stock lending. Whenever you buy a stock, the stock sits in our account. Whenever a customer or an investor buys a stock, at street level, the stock sits in the broker's books and records, in broker's name. And it's available for lending, when somebody is looking to short it and so on. So there is stock lending revenue that gets generated. We'll be a party to that as well, because we are originating these trades. And then there is idle cash on which there is an interest income which is generated. It is the interest income for now is very small, but then times vary, and we are also creating basically fixed income auto sweep products where the idle cash can actually generate more meaningful income. So we'll add another. Like I said, we are at about 70 75 bips right now, and we'll add another, say, about 70 to 80 bips, of new money on the same activity and the same, AUM that we have as of now. And all of this at a 70 bips, 75 bips level itself, we are, positive on the unit economics front. Reasonably strong gross margin. Like I said, as we expand the revenue opportunities, the gross margin will, obviously, it will go from, say, 45% to about, say, 70 75%. Rev share is the biggest, I would say, unit cost that we have. And rev share is a cost mainly because we don't have upfront marketing or direct customer acquisition costs are not there because of the way we distribute. Considering we do a lot of hard work in in infrastructure, compliance, and product, we decided that we will distribute this product B2B2C rather than sort of doing only B2C. And I'll just come to that detail in a moment. But on the economics front, it really helps out because it makes our cash flow management much easier, and payouts are based on rev shares. I'll skip this and get into, yeah. So over the next, say, year or so worth of product stack that we are creating, much of this, so we are at around, about crossed April 22, so we are kind of here. Crypto is something that we haven't added. We will add in the next stack, and then bonds, etc., will come one stack later. But the rest of the products are already there. So there's a fair bit of work that we've done. Like I said, a lot of these are front end products. Some of these are back end products. So you will see that the product stack itself will continue to grow, and every new area of product essentially brings a new area of revenue for us, and it also becomes one more reason for the investor to use the platform. So the share of wallet that we have from every investor on the Stockal platform kind of continues to grow with every new product that we have, and that really is the idea here. There is some work on the crypto side, but let me not get into it too much. We'll use this if there are any questions on crypto. But let's talk about regions, because this is critical to what we are doing now. We are, like I said, we are in MENA and we are in India. We are expanding into Singapore. There is a company in which we are taking a stake, and we are doing an agreement to move their assets over to Stockal, which will essentially double our assets. So we'll go from 140 million, 150 million to about 300 million in assets in one shot. And we will also be able to help them grow their AUM by adding more markets where we are present. We have so many B2B2C distribution partners where we can plug and play their this company's products. We can bring them into India. We can help them expand into the Middle East as well. We can use them in China and in the US, because wherever we are regulated, we can help them ride on the distribution that we have created, and they are getting regulated in Singapore, so we can use that to kind of take care of the Southeast Asian expansion. And then subsequently we will look at China, Saudi Arabia, etc. Those are again important markets for us. We have some inroads already. We have one investor in the previous round who's very strong in China. We are working with them to figure out. We're right now working on the compliance piece and the remittance compliance piece, really. Once we do that, then China, we'll be ready for China. We have another investor from our previous round who's a very senior person, but as a company, very prominent in Saudi Arabia. So again, that will give us a lot of opportunity as we want to get into Saudi Arabia and so on. The good thing that we've noticed is that once you acquire a customer on Stockal and he or she adds some funds into the account, they continue to add funds for the most part. And we see nearly zero churn. When from funded accounts, we see nearly zero churn. So it's like having a bank kind of scenario where once you start opening accounts, unless you give them a reason, your customers won't leave you. They've put monies into your account, really. Right? And what is happening additionally is that a virtuous cycle is kind of there are early trends and early evidence. There is early evidence of a virtuous cycle, in the sense that you make an investment, right? And out of 100 people, say another 20-30% people add more money, every quarter. Which again, so you don't have to acquire these guys again. They're anyway adding more capital. So your existing customers' AUM will also grow. And then because we are B2B2C, and every distribution partner that we have is a fairly large, has a captive audience of a large number of people. They keep adding newer accounts every quarter, right? So all we basically need to do is keep adding more and more distribution partners and keep enabling them to add new customers. So the more we add new distribution partners, the higher our captive audience will become. The greater the captive audience and the better we execute, we'll continue to get new accounts. And every existing account will continue to add money. And this is perpetual, essentially, right, until we exhaust all the customers of all the distribution partners that we have. So we've sort of seen the efficiencies come into play in the last, I would say, 6 months, especially when the markets have been down. That even though the markets were in doldrums, even though there was a lot of negative sentiment around, investing in stock markets in general, and US has been in a big mess in the last 6 months as well, with tech stocks being so drastically down. Our system continued to work. Existing partners continued to add new customers just because they had a massive captive audience, and existing users continued to add new money just because they could see that the dollar is rising very quickly, market is cheap, they're already introduced to the market, so they have even more reason to buy at this point of time. So we continuously measure the size of our captive audience. Basically, these are the number of people who are listening to us at any point of time. And this is, sum total of the captive audience or the customer base of each of our distribution partners, minus, let's say, the overlaps and the commonalities. Today, we already have about 25 million in terms of captive audience now. These are some of our I would say, the larger distribution partners. We already power, if you see any list of brokers on most criterias, in India, at least, we would have, almost 50% of the top 15, let's say, brokers as distribution partners for Stockal. We also have some of the relatively large wealth management platforms as partners as well. And we also now have a lot of some of these are going live as we speak, some of the fintech wealth management platforms or neo-banking platforms, brokerage platforms, alternative asset platforms, many of them using Stockal to offer global investing to their customers. And this is across markets. It's in India, it's also in the Middle East, and we are doing the same thing in Southeast Asia. So this slide is really about why we are doing the stake acquisition in Singapore. It doubles our assets. Given our growth, I think on a combined basis, we'll be at 300 million plus. We'll grow 15 to 20 million month on month from there. And we already have very strong relationships coming up in Southeast Asia. So having this platform at our platform at where we can be partners, and the licenses where we can also be partners, this will enable us to really expand much more fast in the Southeast Asian region with a stronger footprint rather than beginning from zero and establishing things organically. This will accelerate our access to the region. Then, like I was saying, it will help us unlock potential in MENA and other markets as well. Some broad numbers. I mean, we did about 800K out of revenues last year. This year, we should cross 7 million plus. Basically, this is us plus the stake that we are acquiring, in that platform. Next 23, targets are pretty aggressive. But I think if the markets continue to be as they are even now, right? I mean, we'll still do this because the dollar continues to rise, and the stocks that people are looking at are still available at pretty attractive valuations. So for the next 1 year, if this continues, more and more funds will keep coming into Stockal actually. Similarly, strong trends and outlook on acquisition on the AUM as well. I think this 950 million actually, this is a little bit more aggressive, to be very honest, than we had thought, given what has happened last, I would say, 2 to 3 weeks. If a little bit of recovery happens, I think we should still be able to do 800 million or so. But otherwise, this instead of December, we may do this by, let's say, April next year. Transactions are 5x of where the AUM is really. So if we do hit even 800 million or 700 million in AUM, we'll still hit about 3.5 to 4 billion in transactions. What we've done in the last I would say, year or so is kind of make sure that we have the right kind of team to run what we are trying to do here. And we've added to this. I mean, these are just 4 5 of us on this slide, but overall we are 100 people now, 101, and we've continued to attract high quality senior talent as well. You know, the, we fortunately found people who believe in the story and who believe in the problem that we are trying to solve. And for us, we've kind of been fortunate again, where we've seen that they can solve the problems that we want to solve, right? So we've hired them, gotten them on the team, so to say. For example, Tahir, he heads our MENA business. Comes with a lot of experience in MENA. He set up, multiple insurance practices for HDFC, ICICI, and Reliance actually in MENA. And insurance is distributed like a wealth product, so he has existing wealth and distribution channel relationships which we are leveraging. Ashita comes with a lot of experience in fidelity, so she was a critical part of the fidelity engineering team. So in a way, she's recreating what she did there. She's recreating fidelity from scratch at Stockal. Kumar comes with a very strong business experience from startups as well as from venture capital. He used to be with a fund called sorry, forgetting the name of the fund, Artiman Ventures. He was with Artiman Ventures, and then he was head of business in a couple of large startups, well-funded startups. And we've also kind of realized that we would need to have legal as an in-house skill. So while we do have outside counsel for various things, we have an in-house legal team as well, and Tem heads that. Again, very, very experienced legal hand from the UK. He's worked in finance a lot in Europe, and moved to India a few years ago. And since then, he's worked very deeply in Indian financial services as well. These are just some of our investors. There's a longer list, but the one, I mean, obviously you would know HDFC. Peak Six is probably worth talking about. Peak Six is a $35 billion investment firm which owns Apex Clearing, right? And Apex is really the back end, or has been the back end of Robinhood in the US. They've been at the forefront or the back end of a lot of capital markets evolution in the US in the last 10 years. So they are the firm behind, clearing firm behind Betterment. They've been the clearing and custody firm for Wealthfront for a very long time. They were there. Built that out. Other than Robinhood, so in the wealth management or the robo advisory space, very big. They are behind many of the top brokers in the US as a clearing and custody partner. They are behind Marcus, which is Goldman Sachs's neobank, about 150 billion in assets now. They are behind Webull, SoFi, many or most of the last 10-15 years of fintech startups in the capital markets have actually ran or built on top of Apex. So Apex is one of the is a partner to Stockal as well on the US execution backend front. And Peak Six is on has invested in Stockal. Peak Six also happens to be on the cap table of Robinhood. HDFC basically wanted to be. I mean, we love having HDFC on the cap table. Because obviously there is credibility. They've just done a massive amount of due diligence on the platform in all respects. But they're also a very key distribution partner for us. So we really want to double down on our HDFC relationship going forward. And one can have $1 billion in assets just from HDFC, to be honest, if we do it well. Hashed is a Web3 crypto alternative fund. They have a lot of investments in Web3, actually, about $140 million Korean fund. We are, very interesting investment for them, I would say, because we are not quite, characterized as a crypto or an alternative, asset platform, but we are multi-asset. So it's very interesting. And for us, they are very, very unique for us because we are able to lean on them for a lot of the new stuff that we are doing. And July is a micro VC, very supportive. Upcoming fund in India. Aroa is Ritesh Agarwal's family office. Was a family office fund. Now they're kind of creating their own vehicle. Ritesh is the founder of OYO. So yeah, that's basically it from my side. Happy to get into questions, answer specifics. Thank you so much.
Thank you, Sitashwa. Thanks a lot for this humble presentation. I see a lot of growth opportunities with the companies, especially the way you guys are growing the AEM and others. Keeping this, while I understand your business quite well, probably now the participants can ask the questions. To start with, Mr. Vinod Subramaniam has asked two questions. I'll start with those two questions. Then
Sure.
we will open the things for all others so they can ask their respective questions. I will explain. I will tell the question. Then you can take one by one. First question is, considering the macroeconomic uncertainties, what is the level of risk considered for the numbers forecasted in the EEM for next 1 to 1.5 years? And second question is, you talked about open architecture platform. Mr. Vinod would like to hear on how you want to, what is your plan to scaling it up? And if you are planning to do so, what is that you are watching out or what you are really excited about? So there are two questions. One is on the EDM side, and second one is on the open architecture.
Right. Thank you. Thank you so much. No, so like I was saying, when I was talking about AUM itself, I think there is obviously, given the short term, volatility and environment that we have seen in the last month, 2 months, especially, I think while our plan or all our plans have been towards geared towards, getting AUM to 1 billion or close to 1 billion as quickly as possible. And we're really thinking of a jump from 300 million to 1 billion, right? We're not from 150 to a billion here because, and then, including the assets we'll start getting from Southeast Asia. I think it makes sense to temper expectations to a certain extent given the environment. But I would still not become super conservative about it because I have seen especially in the last 3-4 months, 2022, that even though markets have been really down, what has happened is that because this is a cross-border, context, people have kind of felt an even greater need to diversify, and not like the Indian market has done well in this time frame as well, right? So I think people's need to diversify was always there, but people's ability was lower because infrastructure wasn't there. And now that infrastructure is there, more and more people just want to diversify, right? So that will continue to attract assets. So I would still believe that if not say 900 million, we'll still be able to get to say 700 million or 650, 700 million kind of range. I think that we are still very optimistic about. The other reason why we're optimistic about it is that a lot of our distribution partners have just signed up. Like they're very new in the system. So they haven't really yielded much so far because they've just kind of joined. And given that the distribution reach has grown, our captive base has multiplied in the last 6 months. So we really double down and focus on the distribution channels that we have today. They will yield newer accounts just because they're so large, each of them individually. They will yield more accounts, which will yield more AUM. What we need to make sure, though, is that we are not totally dependent on the vagaries of the stock market, which is why newer products like a fixed income product, a banking product, I think these are important because, and this is something which is coming from our experience in the last 3 months also, where a lot of people have sold, but they haven't withdrawn the cash. They've sold and they've kept dollars. Now they need they need an avenue to deploy these dollars that they've just kept as cash. They may want to just create a 2%, 3% on the dollar kind of yield on them. So if we are smart about it, if we bring fixed income products at the right time, and we are already bringing the banking product here, if we do this right, I think we'll still continue to get assets because we are able to cater to that particular need that they have. So that's what I would say, on the AUM front. Temper it, but I think given the product is expanding, we'll still be able to find meaningful AUM. On the open architecture front, what we're excited about really is the fact that why we call ourselves open architecture. Before that, I think we are like that because we are able to onboard asset classes and products on a common architecture, on a common infrastructure that we have, and the tech takes over. Because of that, we are excited about alternative assets. We are excited about newer investing strategies that people are coming up with, because there's just so many new ways of analyzing data, and there's just so much new data to analyze these days. And people are reaching out to us with things like sentiment-based funds, things like crypto funds, pre-IPO funds, private market funds, a lot of newer strategies in quant on the quant side, a lot of thematic funds, fixed income funds, many fixed income funds as well. So, and we feel excited about these because typically these kind of products are fairly exclusive. But if you put them on the Stockal platform, the way we are doing this, we'll be able to offer smaller ticket sizes and reduce exclusivity, make them more mass market for the Stockal customers. I hope that was helpful.
Yeah, no, that absolutely it was helpful. Thank you.
So thanks for that answer.
I think Rachita has a question.
And the next question comes from Mr. Unikrishnan Karta.
Okay.
How exactly you are differentiating from a similar global investment platform? And so if you can just answer that question.
So there is no one platform, right? I mean, our biggest differentiator is really the way we are building it. There are platforms which are fund focused, right? So they build like a allocation vehicle, right? But they don't focus so much on the remittance piece and the compliance. They don't typically end up working with central banks and so on. Then there are the B2C platforms, right? Where they tend to either be advisory by nature or they are brokerage by nature, but they're B2C. And if they're advisory or brokerage, they are focused on the US market, right? So they are basically platforms for Indian people who are investing in the US markets. We are broader than that. We started off very consciously with Indians investing in US, but very quickly, we expanded into MENA, so multi-country, right? And we are also B2B2C. So our distribution model is very, very different, which is probably why, our assets are also generally larger than the B2C players typically in this space. So for example, we enable platforms like HDFC, Motilal, Geojit, and so on to help their customers invest or save money overseas. I think in that manner, we are very different. And considering the product mix again, like nobody has, brokerage, sort of investing and banking plugged into each other at a global scale. Nobody has that the way we have. And nobody has solved for compliance on multiple markets, right? Nobody is as regulated as we are also. I mean, we are regulated we are either already regulated or like the last stages of getting regulated in like 4 different markets, which again, none of the other players in this country has done so far. I hope that was helpful.
Yes. Thank you.
Deepali Vasant has asked a question. Explain something on the taxation part of this investment, although may not be directly relevant, but she's asking what will be the tax implication if she invests in Stockal. If you have an answer, you are happy to get that answer. Otherwise, we'll take it back.
I mean, the broad answer is that, it depends on which country you are doing this from, right? So if this is in the context of a resident Indian, then global investing, especially US capital markets investing, is treated as an unlisted investment. And so the good news is that there is no tax on capital gains for foreigners in the US. So you get to bring your money back to India, and then you are, you're taxed on your capital gains long-term, short-term, but the rules are different for Indian listed securities versus unlisted securities, and this is treated as unlisted. There is a dividend withholding tax that is applied in the US. So what happens is that when you bring the money back to India, you don't have to pay tax on it in India. Otherwise in India, you have your dividend is taxed as regular income, right? So in this case, you would have had to pay regular income tax on your dividend earnings, but it is already tax withheld in the US. So you get an acknowledgement and you show that you file that with your Indian filings, and you don't have to pay tax here because there is a double taxation avoidance agreement between India and the US. So again, long story short, capital gains taxed in India, dividends taxed and withheld in US, and you're given an acknowledgement, so you're not taxed in India on that.
Thanks, Hitashwa. Rachana has a question. This is from her one of her client in terms of the Rachana.
Yeah. So good evening. So this question is not only for you, but it is a generic. When we are talking about a multiple country having the investment, they said how we can validate with an authority, because he gave me an example. Now when any of the person have their online any of the portals, but we will get the end of a month either CSDL or NSDL saying that these are my holdings. So I know that somebody is not cheating me on my holdings. So what are the different authorities of a different countries you will be able to give it to them to make sure that it is not your product, by the authorities has been validated their holdings?
Yeah. So the holding structure, if you're investing, let's say, so we have to take examples of different products for different markets, right? And US market is the biggest market, in this particular case. So just like here we have NSDL and CDSL for custody, in US also there are multiple custodians. So for example, in our case, Apex is a custodian, Citibank is a custodian, and the way the securities are held in the US is different from the way they are held in India. In India, you have DMAT basically, right? So ultimately, irrespective of what CDSL and NSDL does, every unit of stock is dematerialized and given to you in your hands, in your name. Whereas in the US, the holding structure is such that your shares are held in the broker's books and records in your name, and then in the custodian's books and records in the broker's name with an allocation to you. That's the holding structure for everybody in the US. And then there are significant, you can validate this with the SEC, with FINRA. Your broker will give you the statement stamped from wherever it is required. That's just the way the holding structure in the US works. But there is no concept of CDLS and NSDL equivalent structure there, or a DMAT for that matter.
What about other countries?
We don't offer products from other countries as of now, but we are offering funds now. So funds, you will get a statement from the custodian, from the trustee of the fund. Again, typically exactly the way it happens otherwise. In the bank account also, you will get a statement which is off the bank account, of the bank in the US. And bank accounts are backed by FDIC insurance. Okay. Brokerage accounts are also backed by SIPC insurance up to $500,000.
Thank you.
Yeah, so those are the questions I could see on the chat box. Some of the questions with respect to the investments and on the platform related investments, I have responded.
I think one question, Dutta, right? See, I know some of the plans that you have is to go ahead and with this acquisition, right? And then that's where you're saying you're probably going to double your AUM and then whatnot, right? So how far you are with it, and what's the plan if that doesn't go through? Is that even a case? Is that even something that you should look for, or how are you thinking about the acquisition?
So it's it's papered out. We have the MOUs, etc. in place. We have the amounts fixed. Everything is papered out, Vinod.
Okay.
We just have to draw down the capital and make the payments.
Okay, got it. Thank you.
Yeah, hi. This is Gopal here. I just had a follow-on question to what Unikrishnan had asked. I just typed it in the chat box.
I can see that.
I'm still trying to sort of figure out what would be your sort of biggest competitive difference, right? And what stops others, perhaps with deeper pockets or similar offerings, entering and offering exactly the same that you're doing? Perhaps not now, but maybe a year down the line or a few months down the line. So what would be your differentiator, let's say a year down the line, if this space starts to get more crowded?
And I think the space will start seeing more players because, well, the space is growing and there seems to be a lot of interest. I mean, we constantly think about differentiators as well. When we started off, we were the first guys, so we clearly had a first mover advantage at that point. But two things we think of as differentiators overall. One is product, and the other is distribution. Right? Distribution at the end of the day is the biggest, I would say, differentiator. And the more distribution network we have locked in, the more difficult it will be for a newer player to sort of come in and find distribution, even though the product may be competitive or similar or whatever. But what we've been able to do, and what we are doing with capital that we are constantly raising also, is build product differentiation by way of getting appropriately regulated. Right. So we started off with an Indian regulated entity. It took us about 6-7 months to put that in place. That enabled us to do, global brokerage for Indians. Then we applied for a MENA regulated entity, a DIFC license. It took us about 8 months to get that. And that now allows us to do KYC, AML, checks and balances, also do distribution much more aggressively in entire MENA. In fact, Eastern Europe will also get covered for the most part. So somebody else who's coming to do exactly the same thing will have to also cross these regulatory moats, which basically buys us time everywhere. And in doing this, what we've also done is we've worked with the regulator. So in some cases, everyone will get the advantage of that, because the regulator, once comfortable, becomes comfortable overall, right? So in some cases, everyone will get the advantage, but we'll always have a bit of a head start because every time you do something like this and it's new in the ecosystem, you have about 1 year of head start on that particular product. And 1 year is enough of a head start for you to get distribution, right? Which then becomes a larger moat. I think that's the way we are thinking, that whenever, when we did US stocks, for example, then many players came into US stocks. But our distribution was much better because we were B2B2C, and we went into HDFC and we went into Motilal Oswal and so on. They could not compete strongly on the distribution front, and we became much larger than everybody else very quickly and continued to lead that. Now we are adding more products. So for those products, again, we have taken regulatory approvals, which gives us a bit of a head start. And then, we use our existing distribution networks to add more distributors then, right? So which gives us a further 1 more year, perhaps. So I think you can only get about, 1.5 to 2 years ahead of anything in this market. But as long as we can do that, 12 to, let's say, 18 to 24 months of advantage with newer and newer products, and keep our distribution tight and our partners happy, I think it will be difficult for new players to come in and make a dent. But that being said, the space is also expanding very fast. Right? So like last year, like I was saying, last year's LRS for investing was about 470 million. And for the last 5 years, it's been about 400 million or thereabouts, constantly 412, 430, 420, then 450, 470. Year on year, it was in the 400s. Then suddenly last year, it has grown from 470 million to 747 million. RBI data has just come, I think maybe 2-3 days back. So if it's growing at this pace, there's room for a lot of players actually.
Right. I think also just to add to, I think what Sitash was saying, right? And just to give an example that distribution is definitely, a differentiator. Many of the banks have chosen to come through them, right? Rather than do it themselves. And just think about it, for an institution to, who has given access to all clients to a particular platform, right? To go back and change it, and it is definitely going to be, a little difficult. As well as I think the team has been able to get a few of your biggest guys on the distribution side as your equity investors as well. And so I think those are a couple of things that, we liked about Stockal.
Right. Thanks for that. Just one more question, if that's okay.
Yeah.
On this distribution strategy that you have, B2B2C, right? considering that your end customer is still a retail investor, do you reckon a B2C direct strategy would also work, or is there a thinking along those lines?
Yeah. No, B2C does work. I mean, it's just a little bit more expensive than B2B2C in terms of upfront, CAC, but it does work, right? And over time, our B2C allocation has actually grown a little bit. We are still at around 10% of the total. B2C is only 10% of the total right now, but we see it growing from 10 to about 20-25% over the next, say, 1.5 to 2 years. Also, a lot of B2C is a byproduct of B2B2C, because what happens is that even with distribution via partners, a lot of our partners come back and say that, look, people see you on my platform, but they want to make sure that we've done the right thing. So if they see your brand outside, right? So this is not about performance marketing or conversion orientation. It's about brand. So if you spend some time and effort on building a brand in general, right? So like we are the Visa of investing or the MasterCard of investing. Let's say you will find us on various platforms, but if you do see us, you can trust that your service provider is in the right thing partnering with us. So those kind of campaigns we have done, we started investing in the brand in the last 3-4 months. And some of that automatically ends up yielding B2C traffic also.
Right. Okay. Thanks for that.
Sitashwa, in the interest of all others, I would like to ask a question. Just put some colors on the valuation, current valuation, and post this current round of funding and growth in the AUM, what valuation you have in your mind in terms of the company.
Sure. So in this space, what we have seen is valuation has been anywhere between, depending upon the exuberance of the market or if the market becomes conservative. What we've seen is valuation between, say, about 25 to 30% on the lower side of AUM to about, say, 60% of AUM. That's where we've seen, depending on the stage of the company, depending upon other factors like how many accounts you have, how many licenses, the number of regions, those kind of things, what kind of mode, quality of team, and largely, the earlier the stage, greater the emphasis on the team and other factors. So, but we do feel that on a very, it's very practical. If you have, let's say, a 35 to 40% as a valuation number with respect to your AUM. So in our previous rounds also, I mean, we were at about 85 million in AUM when we raised at a 30 million pre-money valuation. We were able to successfully do that. We had investors, like I said, from US, from Korea, from India, Middle East, Southeast Asia, multiple regions kind of participated in that round. We raised about 7.5-8 million in that round. So what we believe is that once we cross, say, the 300 million kind of AUM mark, and considering all the other things, right? Relationships like HDFC and Kotak and others that we have, and relationships, that we'll get in Singapore, and relationships that we have in MENA, and licenses, and therefore the footprint that we have, all of it put together at a 320 million in assets base, we'll be able to pull a valuation of, say, 120 to 150 million, depending on where the market is at, right? If it's a little bit of exuberance is there, it could be higher than 150, but looking at it conservatively, let's say 120, 130 million, right? So that's where we will get to post whatever we are doing right now. And therefore this round is at 70. It's a convertible note with a 70 million pre-cap and a 10% discount. So that kind of also saves for a scenario where markets become very conservative and future capital is not easily available at the right valuation or desirable valuations. Then investors will get the advantage of a 10% discount to that round, right? And we've kept it like that because we are being practical about it, to be honest. But if things go the way we see them going without becoming overly aggressive, I think Series B will happen when we are at about 400 plus million in assets. And we'll be able to do a valuation of, which is north of 150, 160 million.
Okay, great. So yeah, thank you. I think those are the questions from our and our audience side. Thanks for your time. Very great, very good story. And we have not seen these type of platforms, and you are the pioneer in this particular thing. For all the participants, thank you very much for making your time today. And any queries, please drop in a mail to ET Club or to your respective advisors, and we will reach out to you and taking the points from Sitasva, and look forward for joining the Stockal as investors. Okay, thank you very much. Thanks a lot.
Thanks a lot.
Thank you. Awesome
Thank
job.
you.
Thank you.
Thanks a lot,
Thank
Anil.
you.
Thank you so much. Thanks a lot.